Hello, welcome to Macro Point of View Commodity News on October 12, 2023. And in today's show, we're gonna take a look on a few interesting commodities markets that in a nice position or need some explanation. So let's go. Let's start with the gold market. As you can see, my market price movement idea is fulfilled almost exactly as it should be. Of course, conflict in Israel helped a bit of this market, yet there is also some news that Federal Reserve in the United States start signaling that they will stop on the current rates level in United States, which is lowering level on a dollar value and rising gold price. Of course, we are now reaching quite important area around 1900 per ounce. And as you can see, we've got SMA 55 on daily chart, which is $5.50 higher, so it also has Fibonacci retracement 38.2%. So all of that creates a very strong area, which will be probably very hard to overcome for gold prices at the moment. What I can see is that the gold will rise much more above 1900 if Israel conflict will expand to neighbors countries and it will set fire to the whole region. Of course, Israel will be supported by United States and Arabic countries will be supported probably by the Persian Gulf countries. So it might create a huge problem and it for sure will affect the gold prices. We know that the war, if it's stable like Russian-Ukraine war, it stopped affecting the gold market. But unstable, expandable to another country's war is something new. It's hard to forecast World War III due to this Hamas-Israel conflict. Yet, if another countries will join this conflict on a more regular basis, from Lebanon, from Syria, from Jordan, it will be probably some risk rising that the whole region will be set on fire again and it will affect the gold prices. Yet I think we can still expect that on a technical level the gold will probably attack $2,000 this year, but not certainly when exactly, as it depends on a global economy and global wars. The other situation I wish to talk to you about is the rice market. As you can see, we've got Fibonacci retracement from the top level from June. It's $19.9 and the lowest is in July, which is almost a little bit under $15. And between this half of July and current situation, we know that this market is mostly between $15.4 and $16.4 consolidation, with a little breakouts from the both sides, a little bit more higher, some delicate movement downstream. And for the past month, we have even a smaller consolidation, which you can see here on this nice white box. And this nice white box is showing our consolidation between 15.6 and a little bit above 16.2. And for the couple last days on the market, we have an inside bars. As you can see here on last Friday, October 6th, we've got the huge candle, and next 4 candles, including today's, that is still under construction, let's say it, they're all inside bars. So we have also a technical situation. So we've got consolidation with inside bar, which should move our price far away. Why I'm talking about the rice? Because India claimed that the ban export on some types of rice, which should expire this Sunday, October 15th, will be extended till March 2024. So far, it's not affecting very much this price, yet there is hard to say when it will start affecting, especially that we have no idea how bad will be in November, December and January. The El Nino weather, especially in those Southeast Asia, which is quite important area for rice exporters. So this is the current situation on rice, which is quite surprising. And I will also talk about another soft market. And we've got cotton area here as well. We've got some situation with the consolidation here. $78 lower end and 78 cents and 90 cents as a top end. And it get even tighter on August, September, and even now in October, because it's between 84 and 90 cents. It's really, really hard to lie down with it, as it's, as I said, quite tight. Yet I think this market will not be affected by the rising demand for cotton by China and by the problems with the cotton in the United States. Why? Because China at the moment is buying more cotton from Brazil and Australia. So the only chance for American contracts for cotton that we have here on the screen to rise is if El Nino will affect cotton market in Australia, and then the China should be turning to United States to fulfill the demands for cotton. That's what I think about this market at the moment, and it's really, really hard to say when it's gonna happen, as El Nino is a weather condition that is more likely unpredictable when it's gonna hit exactly. And for the very end, current situation on the oil market, as you can see, SMA 55 is stopping the prices of oil that start rising by gap on Monday morning after this Israel situation occurs. But as you can see, we can almost say that this gap was closed here on yesterday candle, and with the low 85.21 and higher here is it's 26 cent difference. Yet I consider this gap as closed. So what's now? Well, American Energy Information Agency from United States claimed that OPEC Plus will cut deeper next year, another 300,000 barrels per day. Also, Vladimir Putin claimed that OPEC Plus is working perfectly and they're gonna hold on to this alliance of OPEC Plus and with the cuts, and they will be for sure maintained till December. And some analytics, some politics claim that those cuts, those voluntary cuts by Saudi Arabia and Russia, which is 1.3 million barrels per day, will be extended into the first quarter of 2024. That should keep the price of oil on those levels. In the meantime, United States administration raised average forecasted price for Brent oil for the next year from a little bit over $88 per barrel, which is something around our current levels, to almost $95 per barrel. So I think everyone is expecting. And how about the Israel conflict affecting the oil market? As we can see, it raised on Monday, then we've got some drop, and now we are trying to settle something, and we've got some inside bar probably creating on today's candle, but we'll see this of course tomorrow. If the conflict will spread to Lebanon, to Syria, and some Saudi Arabia or other Arabic countries will join it, or United States will join it, then oil will react. Without that, at the moment, the level of the conflict is very regional, and it's most likely it's very strong attack from Hamas to Israel, but yet on the other side there's a war there since creating Israel in 1948. Yet please remember that Israel existed on that area even 12 centuries before Christ. So I'm not gonna go into the politics or something else about Israel, but I'm just to show you how the facts are on those backgrounds, because many people say Israel was created in 1948, which is true. It was recognized as independent country in 1948, yet some form of Israel kingdoms were there much earlier. So it's not simply one side or another. But yet, coming back to the oil market, at the moment I have no idea what this market will do. We've got this a bit wider than usual gap between SMA 55 and $90, which will probably hold the prices down, but it's also $1.7 gap between those levels. If they will be closer, it will be much stronger resistance. With $1.7 gap between them, it's hard to say which one will resist more. At the moment, SMA 55 this week is holding without big problems. Thank you for your attention. Don't forget to subscribe and share our material, and see you on the next shows.